Imagine waking up one morning to see Bitcoin's price skyrocket or plummet in a matter of hours. What if I told you that just a handful of people and companies have the power to make that happen? The Bitcoin market might seem like a wild west of decentralization, but the reality is that a select few hold an enormous amount of BTC, and their moves can shake the entire crypto landscape. Who are these Bitcoin titans? How do they accumulate so much? And most importantly, how can their actions lead to massive price swings? Stick around, because today we're diving deep into the top 10 biggest Bitcoin holders and the market-moving power they wield. 1. Satoshi Nakamoto, the ghost billionaire. At the top of the list is none other than the mysterious creator of Bitcoin, Satoshi Nakamoto. Estimated to have mined around 1.1 million BTC in the early days, this stash has remained untouched for over a decade. But what if it suddenly moved? The speculation alone is enough to send shockwaves through the market. If Satoshi, or whoever controls these coins, were to sell even a fraction, it could trigger a market-wide panic. On the flip side, if these coins are lost forever, Bitcoin's actual circulating supply is even lower than we think, making it even more scarce. 2. The Winklevoss twins, from Facebook lawsuit to Bitcoin billionaires. You might know them from their legal battle with Mark Zuckerberg over Facebook, but Cameron and Tyler Winklevoss turned their $65 million settlement into one of the largest Bitcoin fortunes in existence. Owning around 70,000 BTC, they built their wealth on Bitcoin and are now the founders of Gemini, a major cryptocurrency exchange. Unlike silent holders, they actively advocate for Bitcoin adoption, pushing for mainstream acceptance. Their public bullish stance influences investor confidence, and when they make moves, the market listens. 3. Tim Draper, the auction winner turned crypto prophet. Back in 2014, the US government auctioned off Bitcoin, seized from the infamous Silk Road marketplace. While many were skeptical about Bitcoin's future, one man saw its potential and went all in: venture capitalist Tim Draper. Draper snagged 29,656 BTC at an auction price of around $600 per coin, a decision that proved to be one of the best crypto investments ever. Since then, he has been one of Bitcoin's most vocal advocates, consistently predicting that Bitcoin will reach $250,000 and beyond. But Draper isn't just a passive investor. He actively funds Bitcoin-related startups, pushing adoption and innovation. His public speeches, bullish forecasts, and investment moves often spark renewed confidence in the market, proving that even words from influential figures can send Bitcoin soaring or crashing. 4. Michael Saylor and MicroStrategy, the corporate whale. If there's one person who made Bitcoin a boardroom topic, it's Michael Saylor, the CEO of MicroStrategy. His company has been on a Bitcoin buying spree, accumulating over 252,000 BTC, making it one of the largest corporate holders in the world. MicroStrategy treats Bitcoin like a long-term treasury asset, leading other companies to consider Bitcoin over traditional cash reserves. Whenever MicroStrategy buys more BTC, the market takes notice, often triggering price surges. However, some argue that one company holding this much Bitcoin could be a ticking time bomb. If they ever decide to sell, the impact could be catastrophic. 5. Changpeng Zhao, CZ, and Binance, the exchange powerhouse. Changpeng Zhao, or CZ, is the founder of Binance, the largest cryptocurrency exchange on the planet. While the exact amount of BTC he personally holds is unknown, Binance itself holds massive Bitcoin reserves to ensure platform liquidity. When Binance moves BTC, it can trigger market speculation. If large transfers are detected, traders rush to predict whether it's for institutional sales, security reasons, or new product launches. And let's not forget, Binance has been at the center of crypto regulatory battles, and any uncertainty surrounding them often spills over into Bitcoin's price. 6. Tesla, The electric giant with crypto roots. Elon Musk shocked the world in 2021 when Tesla announced a $1.5 billion Bitcoin purchase, instantly sending Bitcoin's price soaring. This marked one of the most high-profile corporate endorsements of Bitcoin, fueling widespread adoption and speculation. Though Tesla later sold a portion of its holdings, the company still holds 9,720 BTC. But here's the twist. Musk's influence goes beyond just Tesla's balance sheet. His tweets and statements alone can trigger massive price swings, whether it's about accepting Bitcoin for Tesla purchases, concerns over energy consumption, or even mentioning Dogecoin instead. Tesla's Bitcoin strategy remains unpredictable, making it one of the biggest volatility triggers in the market. Any changes in its holdings or policies could send Bitcoin bulls or bears into a frenzy. 7. Block.one. The mysterious crypto giant. Block.one, the company behind EOS.io, is one of the largest corporate Bitcoin holders, with a stash of 140,000 BTC. Unlike vocal Bitcoin advocates like Michael Saylor or the Winklevoss twins, Block.one keeps a low profile, making its movements less predictable. But here's the catch. Since Block.one is deeply involved in blockchain development and crypto infrastructure, any major sale, transfer, or acquisition of Bitcoin could signal a strategic pivot. If they suddenly offload BTC, it might indicate new investments, funding needs, or internal restructuring. On the other hand, if they continue holding, it reinforces Bitcoin's role as a long-term strategic asset. Their silence makes them a wild card, but their large holdings ensure that when they move, the market notices. 8. Tether, USDT. The stablecoin giant. Tether, the company behind USDT, the world's largest stablecoin, holds 82,454 BTC as part of its reserve backing. Since USDT is the most widely used stablecoin in crypto trading, its Bitcoin reserves play a crucial role in market liquidity and stability. If Tether increases its Bitcoin holdings, it can reduce circulating supply, potentially driving prices up. If it sells off a large chunk, it could flood the market, triggering panic, sell-offs, and price corrections. Because USDT is a major on-ramp for traders and institutions, Tether's Bitcoin reserves and how it manages them can significantly influence market sentiment and overall liquidity. Traders closely monitor any changes in Tether's reserve strategy, as sudden moves could signal shifts in broader market trends. 9. Grayscale Bitcoin Trust, the institutional gateway. Grayscale Bitcoin Trust, GBTC, is one of the largest institutional Bitcoin holders, managing over 206,835 BTC. As a publicly traded trust, it allows investors to gain Bitcoin exposure without directly holding it, making it a key bridge between traditional finance and crypto. When Grayscale buys more BTC, it reduces supply, often driving prices higher. If it sells or allows redemptions, large amounts of Bitcoin can enter the market, potentially causing price drops. Grayscale's fund flows and policies are closely watched, as they often reflect institutional sentiment and can signal major shifts in Bitcoin's trajectory. 10. The United States government, the unintentional whale. Surprisingly, the U.S. government is one of Bitcoin's biggest holders, with over 207,189 BTC seized from criminal activities like Silk Road and fraud cases. These holdings aren't permanent. They're typically auctioned off, but the timing and scale of these sales can have a major impact on the market. A large, sudden auction could flood the market and trigger price drops. Selling in smaller batches can reduce shock but still influence sentiment. If the government chooses to hold, it reduces supply, potentially driving prices higher over time. Some speculate the government might one day add Bitcoin to its national reserves, which could reshape its role in the global economy. Until then, Every move they make is closely watched by traders worldwide. How these whales control market volatility. So, how exactly do these big holders shake the market? Large-scale movements. When whales transfer BTC, traders panic or speculate, often causing spikes or drops. Market manipulation. Some believe that coordinated moves by whales can create artificial pumps or crashes. Public statements and policies. A simple tweet or company decision can create massive shifts in sentiment. Institutional buying and selling. When corporations enter or exit the market, liquidity changes dramatically. In essence, Bitcoin isn't as decentralized as we like to believe. A small group still holds immense power over its price. So, with so much Bitcoin in the hands of a select few, we have to ask, is Bitcoin truly decentralized, or is it just a digital playground for whales? Some argue that institutional and corporate adoption brings legitimacy. Others worry that whales could manipulate prices, making Bitcoin just as controlled as traditional markets. What do you think? Are these Bitcoin titans strengthening the market or making it dangerously volatile? Let's debate in the comments. And hey, if you found this breakdown insightful, smash that like button. Subscribe for more deep dives into the crypto world, and turn on notifications so you never miss an update. Until next time, stay smart, stay invested, and stay ahead of the game.